Hello, fellow Rebel Capitals. Hope you're well. So we had the big CPI report come out this morning. We're going to dive into that. And what's shocking about the CPI report is the reaction with interest rates in the Treasury market. They shot higher. According to CNBC, or at least the thumbnail, they skyrocketed. And I think that is an accurate way to say it. In fact, the 10-year Treasury has moved 10 basis points just in the last couple hours. So we've got to go through this CPI report, say, what on earth is the bond market actually seeing? Now, before we get into this, I want to tell everybody right now, we started a brand new YouTube channel. That's it. This is a YouTube channel you guys are definitely going to want to check out and subscribe to. I'm going to tell you about it at the end of this video. All right, let's start with yields. I think that's important. So we're going to go over to the 10-year Treasury and see this action. Now you see it's up I'll call it 5.3 basis points. But look at where it started before we got the report. We're right down at 4.40. So as you can see, almost a 10 basis point move. Now, this is not as extreme as we saw during retardation day, or what do they actually call that, Josh? Liberation Day. There you go. But to say that it's not as extreme, well, sure. But that was like a GFC level of extreme, or like Silicon Valley Bank or something like that, or cerveza sickness. A 10 basis point move in a couple hours in the 10-year, that's skyrocketing right there. There's no other way to really describe it. Okay, so why is it doing this? I mean, did the CPI come out hot? Did the CPI come out at 5%? I mean, I think expectations were for 2.7. Month over month expectations were for 0.3. So what on earth happened? All right, let's get into that CPI report. We're going to go over to the BLS. Here you go. Drum roll, please. Consumer Price Index report. This is out July 15th. This is for June, of course. And we see that month over month, we're up 0.3%. Now, compared to last month, or actually compared to the last 4 months or so, that is high. But you have to remember where we are, or where we were after retardation day. And that is that, oh my gosh, the Trump tariffs, they're going to create hyperinflation and all this. And you guys remember on this channel, I was like, well, I don't know. That sure, it's going to maybe bump up some prices, but they're not going to continue to accelerate higher. You just might have a price adjustment, and that's going to take purchasing power away from domestic services. So you might see goods go up, but you probably see services come down slightly, and it might be a bit of a wash or a slight increase. And it's played out exactly like we predicted on this channel. So this in and of itself is a head scratcher. You're like, okay, I get it. And by the way, that was right in line with expectations. So why on earth did the 10-year Treasury just rip higher? Well, let's keep going here. All right. The index for shelter. Let's see if we can get some more specific. Here we go. This is better. Let me zoom in for you guys. All right. I think that should be easier to see. So all items, like we said, 2.7. That's year over year. Year over year. Month over month, 0.3. Now, you know what? I should have gone over the base effects. That's really important, because let's go over to the expectations here real quick, guys. We're going to look at the Market Watch calendar. Expectations were 2.7, came in line 2.7, but you'll notice last month we were 2.4. Why there was such a big increase is because of the base effects. So I know I'm jumping around here a bit, but just bear with me, guys. If we go to the top of this report right here, you'll notice the month we lost within the calculation was obviously June of 2024, which was a 0, literally a 0.0. So you lose a zero point 0.0. Now, if we would have lost like a 0.4, then this 0.3 would have resulted in the CPI actually coming down. Right? So you always have to pay attention to those base effects. It's very important. Okay, now that we understand that, let's get back to where we were. Okay, so food, we've got quite an increase there. Huh. Energy, big increase. Yeah, oil prices did go up quite a bit. I think, what is it? And again, we have to go back. This is for the month of June, so it requires going back, 6 weeks and kind of thinking about it. I believe we're in the 50s, and then we shot up to 68 or so because of what was happening in the Middle East. So that would explain the big increase here. But year over year, it's still quite a decline. Energy commodities year over year, a -7. So where are we getting the big bump here, according to the BLS? And as you guys know, it's not that accurate, but we have to use this as a proxy. I think it's a good measurement of the trend. And we have to look at this because whether we like it or not, whether we think it's accurate or not, this is what the market is going to trade off of. And this is going to go into the Fed's decision-making process. So we had a 1%. That was electricity. I didn't hear about that. Energy services 0.9. So energy for the month was up pretty big, but year over year down substantially. So we had and let's see, month over month. So that was big. And then we got energy. We said that. And then food was up 0.3. Okay, now going down further. Wow, used cars and trucks continue to fall. That's interesting. Where are we with shelter? That's a biggie. So 0.2. So we're starting to see this decline. And again, you're going to have the same type of base effects that we just outlined for the overall CPI with each individual category. So I'm assuming last year's months that are ticking off, so to speak, especially when we're getting a 0.2, I'm guessing that if you would have gone back to June of 2024, the month we lost was probably higher than a 0.2. So assuming that we continue on this trend just throughout the rest of the year, that means that this 3.8 number is probably going to go down. And this is assuming that month over month the prices stay the same, or as far as the rate of increase stays the same. That's a better way to say it. So just so we're on the same page here, this month we had a 0.2 increase month over month in the way they measure shelter. So assuming that we have a 0.2 for the rest of the year, every single month, I would guess because of those base effects, this 3.8 probably goes down to a 3, something or low threes. And why that's so important is because this is 33% of the CPI. And whether it impacts you, whether it's part of your personal CPI or not, again, that's not what we're talking about here. We're just thinking about this in terms of the central planners, in terms of the central bankers, of Jerome Powell and the people who are trying to micromanage the interest rate at the front of the curve. So they talk about food, energy. Yes, yes, yes. Now, core, I think, came in a little lower than expected. Let's go over to the Market Watch calendar. And yeah, core, they were expecting 3%, and we got a 2.9, so slightly lower. Let's see if they go over. Okay, yes, yes, yes. I'm looking for the core, guys. Brief explanation of CPI. Yes, we get it. Okay. Huh. I thought they segmented the core. I could have sworn they did that. Maybe this is it. Let's see here. All item. There we go. Yeah. So this is all items, the blue, and then core is right here. So that'd be less food and energy. I've always wondered about this because this is literally the most important component of the CPI for the average Joe and Jane. So why would you strip it out? Let's just take a basket of goods and let's just take out everything that people actually buy, and we'll go ahead and leave in what nobody buys, and we'll focus on that for some reason. I don't know. It's always kind of a head scratcher. All right. So this, if you guys haven't noticed, doesn't really explain what's going on with interest rates and why the 10-year shot up 10 basis points intraday. We have to look at the next thing on the calendar, because you guys know from watching my videos that, especially at the long end of the curve, interest rates are all about, well, many, many variables, but there's one overriding factor. This is growth and inflation expectations. We talk about it on this channel constantly, over and over and over and over and over again, because this is one of the most misunderstood things that I see in macro. Whether it's FinTwit, social media, financial media, it doesn't matter. Everyone, and understandably so, thinks that the supply of treasuries is really what moves the interest rate. So if we have demand right here and we have all this supply coming online from the treasury because of deficit spending or whatever it is, then, oh my gosh, well, obviously that's going to increase interest rates. That's not what happens. So why is that why does that make sense? But why in practice does it not really play out that way? Because as the supply increases, the interest rates go up relative to growth and inflation expectation, which incentivizes the banks to come in and buy and bring the price or bring the yields back down to where they were before. Because for them, and I need a whiteboard, but it's basically an arbitrage opportunity. So that's why you have the banking system as a whole, especially global monetary system outside the United States, that really act as that equilibrating type of factor. Now, I want to say that it works both ways. So if interest rates get too low relative to growth and inflation, let's say we had a stable coin that comes out and buys all the treasuries, then the banks would sell, most likely, and take it right back up to where it was. Now, are growth and inflation expectations always spot on and perfect? No. No, they change all the time. But that's the overriding factor. As an example, if you look at, any time that we've had an announcement in the news about the deficits exploding or the debt going higher, have you ever seen that impact yields in the treasury market? I haven't. But when you have something like today come out, or when you have news like today that comes out that's regarding growth and inflation, this almost always impacts yields. That in and of itself should tell you what that overriding factor is. So we are still left with a question, by the way, what happened today? Because when you look at the CPI numbers, they all came in pretty much in line. And by the way, the core was less than. So what gives? It's the next number right here. Empire State Manufacturing Survey. This, in my view, is why you had just massive volatility. And by the way, I wish I could have done a video right when the report came out, because you saw rates just plummet and they go right back up and then they plummet again and then they continue up higher into this trend that we saw throughout the latter parts of the afternoon. And I think there was probably I don't know if there was a lag. That would be my guess. Is you had the CPI, it's digesting, and then the Empire State Manufacturing is a big beat. And they're like, woo, we're going to go up here because growth and inflation expectations just increased tremendously. I think it's all about this data point. Let me just, hopefully you guys can see that. It's the Empire State Manufacturing Survey. Last month, we had a negative 16. The forecast was for a -9, and we had a 5.5. Not a great number, but way better than expectations. So I think that's why you saw this big move up, or whatever you want to call it, the rates shooting up by 10 basis points just in the matter of a couple hours with the 10-year treasury yield. So again, this isn't about supply of treasuries, is it? It's about the growth and inflation expectations going up. Tomorrow, just FYI, we've got producer price index, core PPI. We've got some more really big. Oh, and by the way, we have the beige book coming out tomorrow as well. I did not know that. This is going to be really, really, really interesting. And then Thursday, we've got some big news. Yes, the rest of the week, it's packed here. It's packed with stuff that's actually very, very relevant. Let's go over and see how the other asset classes are trading. Where is CNBC? How do I not have CNBC up here? Oh, okay, here we go. So Dow is down a lot. Huh, that's surprising. 300 points. And no, a lot of times these headlines on CNBC just they contradict themselves. Like it doesn't even make sense. Like, okay, Dow falls 300 points on earnings, inflation concerns, but yet the Nasdaq is up. If the market's concerned about higher interest rates, the Nasdaq should be down more than the Dow. I don't even know. Did they even think about that one? Maybe it's just strictly Nvidia. I know Nvidia is way up today. Which, by the way, if you're a Rebel Capitalist Pro member, that's one of the trades that I made for my model portfolio. Not that I'm a genius trader or anything, but I did really nail this one. And what I did is I went long Nvidia and short Google because I wanted to take advantage of the AI narrative being a headwind for Google and a tailwind for Nvidia. So as far as a return, that was a really, really good trade, but I should have kept it on a lot longer, obviously. So the big news here, I think, is in Bitcoin. Down to 116, way up over 123. So we'll have to see. It's a huge breakout, great looking chart, but we'll have to see if it can sustain this breakout or if it's going to be another one of these head fakes like we saw when it went above, 108 for the first time. I'm going to be paying a lot of attention to Bitcoin this week. Gold down slightly, probably noise. And oil 66. So yeah, let's go back because this is really going to impact. I think this is what it's picking. Yeah, see, the month of June, it just goes straight up. That's exactly what I thought. We were almost in the 50s. It goes up to almost 75. I forgot about that. So this is the increase month over month that's being picked up in energy that we discussed, which was right here. See the 0.9 energy services, energy total 0.9 right here. That's what's being picked up. So if we would have had a month where oil would not have moved up, let's say, I don't know what weighting they give it, but obviously we wouldn't have gone up to 2.7. Okay, so now let's go into the new channel that we set up. Super, super, super excited about this one. And I'm just going to show you guys really quick. I don't even know if you can find it. It might not even be searchable yet. So Josh, you're going to have to put the link. There you go. So it's called Rebel Capitalist Business Biz Accelerator. So what we're trying to do with this channel is I get requests from the Rebel Capitalist community to talk about how I've grown YouTube channels. Most of you know that I've got a couple YouTube channels, and I started posting in late 2019. And with the George Gammon channel, I got that up to 100,000 subscribers within about maybe 7 or 8 months. And now that's up to maybe 540,000. And with this channel, it's up around 200,000. And I don't know that there's anyone in the macro space, I don't think there is, that has taken 2 channels up to over 100,000 subscribers. So that's pretty rarefied air. And the great thing is it's not luck. It's a strategy. And if you just know the strategy, you can replicate it. So, and Josh is also, congratulations to Josh. He's been working with not just me, but he's been working with clients like Robert Kiyosaki, with Kenny McElroy, with Jeff Snyder, and a lot of other people that you guys would recognize, not just helping them with their content, but also helping them create sales funnels and leveraging AI, artificial intelligence. So we're doing so much of this between the two of us that we thought we'd start a channel to help business owners or aspiring business owners to leverage content creation, whether it's Instagram, LinkedIn, Twitter, YouTube, etc., and to really grow their business, right? So we want to try to help business owners or aspiring business owners to leverage content creation, sales funnels, and artificial intelligence to get more customers and to make more money. And we just basically talk about the strategies that I'm using for my YouTube channels and the strategies that Josh is using for his clients, not just with the content creation, but also with the sales funnels and AI to produce really explosive growth and incredible, incredible results. So I know it's a little more niche, but it's definitely something you guys want to check out if you're trying to make money online or you have a small, mid-sized business that you're like, I know I have to do YouTube. I know I have to do a podcast. I know I have to leverage AI and sales funnels, but I just don't even know where to begin. Or if you're doing it now and you're kind of stuck at a dead end and you're not seeing the growth that you'd like, this channel is perfect for you. So again, that's Rebel Capitalist Biz Accelerator. And we just posted a video this weekend. So go over there, check it out. And on that bombshell, guys, enjoy the rest of your afternoon. As always, make sure you're standing up for freedom, liberty, free market capitalism. And we'll see you on the next video.